During our latest roundtable roadshow, we looked at all asset classes that we invest in, or several of them, which is domestic equity, offshore equity, domestic cash, fixed income, property, and also the commodity sector, to try and assess which one of those should give investors a better risk-adjusted outcome, given that we continue to be worried about valuations, and we all know that a lot of the asset classes continue to rally despite a backdrop of deteriorating fundamentals. Then we focus specifically on the SA equity market, largely because that continues to be the anchor tenant, so to speak, of the portfolio. And therein we conclude that the domestic equity market still shows signs of being overvalued with very little opportunity at an asset class level. However, when we do a lot of bottom-up work in terms of stock picking, we are still able to find some crown jewels that are still offering value that we continue to hold. So on that, we continue to like Standard Bank. For us, Standard Bank is a self-help story where they continue to disinvest from high-cost, low-growth jurisdictions and redeploying that capital back into Africa. And we saw that investment thesis coming through with the latest results, where Africa had a strong performance with earnings up about 55% in terms of group contribution. Elsewhere, we like Steinhoff. Steinhoff for us, it's about them conquering the world in terms of retail. They are a fully integrated retail operator, operating largely in Europe. About 65% of the earnings come outside of South Africa, which provides a good red hedge against the weakness of the currency. Then elsewhere, we still like Naspers. For us, Naspers is about transforming the user experience from an internet and e-commerce point of view. And we still continue to hold the view that there is still further upside to the extent that the company is able to monetize their user base. Globally, we like global equities, especially in the US. We think that the fundamentals in the US economy are still supportive of equity valuations. So our multi-asset products are still heavily tilted towards global equities at the expense of domestic equities. And we continue to avoid global and local fixed income, largely because we are in a rate hiking environment, and that is not a good asset class to hold given that environment. Thank you.